JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 28th of January 2021. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. Feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, guys, jumping into the chart. So yesterday we had a nice sell-off. Kind of initially started off with Europe and then was triggered further by the U.S. equities. So and that kind of rolled over into today's Asian session here. And as you can see with Nikkei, for example, I talked about this one and. I was telling you guys to keep an eye on these upside lines here. So yesterday I've mentioned that I'm gonna stay. I'm gonna keep these on the chart for now. And as you can see, we had a nice drop here, and in a way, kind of what's it seems like a very nice coincidence here that the today's daily candle here, Nikkei's daily candle, kind of remained within the area here between these two upside lines. So I mean, very nice, interesting technical coincidence here, but nevertheless we'll take that. But the more important thing here is that it still remains above the 21-day EMA. So in a way, and of course, given this the current weakness, there is a chance to see further declines. However, I'll still remain very careful with this index, because if this shorter term upside line continues to provide support, this one's taken from the low, the 22nd of December, then maybe we could see a nice reversal here and a push higher towards the 28,979 territory right here, which is currently the highest point of January. Of course, we do have 1 day left here of trading in Nikkei. However, I kind of think that this is going to be the highest point now. It will stay the highest point of January. So let's see how this is going to play out, end up being. But for now, looking at the monthly candle here, you can see that yes, we're still in the positive territory, and in a way, if it stays above this upside line, then yes, we will remain in positive territory for the month. However, it will be very interesting to see how the next month is going to go through, because for example, if you look at here, if you look at the 2020 month, February month here, we had a huge decline. If we look at the January the February of 2019, we had an uprise here. So in a way, we have to leave it for now and just kind of observe the price action and watch out for certain levels. And for me, for example, to consider the downside, maybe I would need to see a nice good drop, maybe somewhere below this 27,600 zone right here, marked by the high of the 4th of January, and then maybe lower levels could be met, guys. But again, I'll start looking at the downside if we get a break below this shorter term uptrend here and below the 21-day EMA. and then I'll take it from there. Now jumping into Shanghai Composite. Shanghai Composite is a little bit more on the let's say on the negative side. So the index closed today near the 3,505 territory. It remained below the 21-day EMA. We saw we had a bit of an up move here above this 21-day EMA. However, the bulls didn't have enough steam to drive this one further, and we saw this one drifting further south. So for now, don't get me wrong, we are still trading above this upside line drawn from the low of the 19th of March. But for now, in a way, even if it drifts lower, still this could be seen and could be considered as a temporary correction before another possible leg of buying. However, let's keep it short and simple for now. Let's see if we can reach this area here. This is my next target here in this area between the 3,459 and the 3,466 levels, which kind of mark here the highs here. So the 3,459 area is near the highest point of July, near the highest point of August. And this 3,466 territory is near the highest point of December. Or actually, do apologize. No, that's the 31st of December. We had an overshoot here, so that's not really. That's the high of the 2nd of December here. So in either way, guys, this is the area I'm going to be keeping an eye on. And in a way, it's not far from this upside line as well. So all this kind of could present itself with a nice opportunity for the bulls, maybe. Again, I'll have to pick up on this one then just to see how everything is kind of getting along. For now, from the very, very short-term perspective, I'm still leaning towards the downside. For me to, let's say, consider maybe the upside, well, I would need to see at least the daily candle kind of returning back above this 21-day EMA, and then I'll take it from there. Now jumping into German DAX, the German index here drifted lower yesterday. Closed nicely in the red, and the most important, it stayed below this first of all below this 13,795 zone. Then it kind of and then it also stayed below this other one of my targets here, this 13,673. Then it ended up testing the 13,566 level. I talked about this one, guys, yesterday, and as I said, my next target will be this 13,441-42 zone. And you can see that we've almost managed to reach that area. And well, I mean, you can see that it was a good slide here. However, the index retraced back to the upside a little bit. Currently, the cash index is actually sitting near this hurdle, near this level here, this 13,442. It's slightly above it, and basically we have already kind of drifted back down here. So now the big question here is, can we see a further move here? So for now, to be honest, given the weakness, the current weakness, I will continue aiming slightly to the downside. My next target here will be this 100-day EMA here, shown as the green line, and then I'll take it from there, guys. For now, be very careful, of course. If you're thinking that the index is quite overstretched here, maybe to the downside, and you would like to grab maybe a quick short kind of scalp to the upside, well, I would really strongly suggest to be careful with that, because in a way there is plenty of room here to the downside, and in a way, I mean, we have been already on a good rally to the upside, so maybe there's a little bit of profit taking by, and it's in the end of the month, guys, so be careful of that as well. So yeah, for now, let's see how this is going to play out. However, I'm leaning a little bit more towards the downside. If this 100-day EMA doesn't provide good support and breaks, the next target is the 13,060 territory here, marked by the low of the 21st of December. Excuse me. Now jumping into FTSE 100 very quickly, also seeing a sharp decline here. So continues to trade below this downside line that I talked about previously. This one is drawn from the low, from the high of the 11th of January. But at the same time, it's still trading above this upside support line. Tentative, of course, but nevertheless an upside support line drawn from the low of the 1st of December. The price on the cash index right now is currently fluctuating around the 6,486-85 zone. So yep, basically below yesterday's close and near, let me just end, but slightly above this hurdle right here, the 6,464. So I talked about this one yesterday, guys, and I said to you that if this downside line continues to provide resistance, then my next target is that beautiful number of 64.64, and then we'll take it from there. For now, guys, there is some room here still for the downside, but I'll be very careful near this upside line because in a way it also could coincide here with the 100-day EMA here shown as the green line. So be wary of that. DXY, so nice beautiful surprise here. So popped higher, and this is what I talked about, guys. And DXY yesterday rallied on the sell-off of the equities. By the way, we had the of course we had the FOMC statement yesterday. Jerome Powell was delivering a statement, a press conference, and in a way it kind of sounded a little bit more on the dovish side. So yeah, I mean that wasn't good for the equities. I mean, I think he kind of made a point of that. The pace of the recovery is let me just kind of the pace of the recovery in the economic activity and employment has moderated in recent months, with the weakness concentrated in the sectors most adversely affected by the pandemic. So I mean, of course, he's talking about the fact that he's understanding the fact that the economy has taken a hit a little bit. So yep, we saw the equities kind of drifting lower, of course, in combination with the profit taking, and yep, this is it was the moment for the US dollar to shine then. So yep, in a way recently the US dollar is acting more of a safe haven, and yep, we saw a nice push. So from the technical side here, we had a nice push above the 90.60 level. I talked about it, and we managed to stay above it, as you can see here. So today we're seeing kind of another attempt to make its way higher. However, as I mentioned to you previously, guys, as well, that keep your eyes on this downside line, because if this downside line continues to provide resistance, then, well, I mean, another slide here could be possible. But if it breaks here, then yep, now that's where it could become very, very interesting for more buyers. Now, jumping into gold, and everything's coming in line here with the idea that I talked about, that I mentioned last week. I started talking about this basically, that I was saying that I'm still aiming for the downside. In the beginning of this week, I told you the same thing, guys. I'm still aiming for the downside. And my next target is this 1819 level. So far, we're moving slowly to that level. Again, we're not far from it, so let's see how this is going to play out. I mean, if it can provide some sort of good support or not. So this level also coincides with the 200-day EMA, and if that gets broken, then yep, lower levels could be met. But if it stays like this, if this area continues to provide support, then we could see a nice rebound and maybe a retest of this downside line again. But again, that's a little bit further down the line. For now, let's just aim for that 1819 level, and then I'll pick up on this one after that. Litecoin. So Litecoin is, well, yesterday, first of all, on the stronger dollar, it kind of drifted lower here, and it dropped below this 125.95 level. I talked about this one, and what I was saying then, that my next target will be this 112.75 territory right here, marked by the low of the 11th of January. As you can see, yesterday we had a drop below this, but but we're now pushing back up again. So again, it's a little bit of a roller coaster ride here. So that's why sometimes cryptos don't really kind of play the nice technical game here on certain points here. Let's say, for example, with levels, support, and resistance. As what I've noticed that the cryptos tend to like trend lines. However, I mean, support and resistance levels sometimes don't really work out, but still I'm gonna stick to those because they still simplify my life, especially, and they still kind of explain certain things, so they still show lower lows and higher highs. So here, for example, at this point, we had a nice push lower here below this 125.95 territory, and in a way, if, let's say, for example, this daily candle eventually stays today below this hurdle, then yep, another slide here could be possible. Initially, I'll aim for that 112.75 territory, or even we could go all the way down here towards this upside line drawn from the low of the 20th of October. Okay, so now jumping into the pairs. So if you remember, AUD USD, I talked about this pair yesterday and this week, in the beginning of this week. I was telling you guys to keep an eye on this 0.7640 level. That's the level for me to consider the downside, after a break of which I would consider the downside. And yep, this morning we're seeing a nice break here below this. So now I'm going to continue targeting the downside. Now, of course, ideally, my next target is the 0.7462 territory, but let me just put this level here on the chart as well. This is my little intermediate level here that I'm where a holdup might occur, and that's the low of the 28th of December near the 0.7557 territory. So keep your eyes on that one. This is where a holdup might occur, and then we could see something maybe like this happening here. So yep, for now. Let's see if this is going to play out or not, but that's my main scenario. So my main target right now is going to be this 0.7557 territory, and then the next one, it will be the 0.7462 territory. In case this one drifts back up here and let's say ends the day above the 0.7640 zone, somewhere around here, then or even actually better, let me just zoom in here a little bit just to be a little bit more on the safe side. That's the low of the 26th of January, and there we go. Yep, beautiful target here. So the 0.7669, the low of the 26th of January. If we see the rate climbing back above this hurdle, then maybe I'll consider an up move here towards this downside line again. And then we'll take it from there, guys. Okay, so finally, USD Jpy. So beautiful explosion yesterday here to the upside. As you can see, the dollar was stronger than the yen, although the equity markets were selling off. We had a bit of a risk off environment, and normally, of course, you have your yen, which strengthens during these times, and it is kind of seen as a safe haven. But here we go, we have the dollar, which is seen as even a more of a safe haven, and we had a nice push here through this downside line, and now we're approaching this 104.40 level, the one that I keep talking about. And in a way, if we get a nice push above it, that's where I'm gonna start looking at some higher levels, and well, I mean, maybe we could go further north here towards the 200-day EMA or even above that. So for now, all eyes are on this 104.40 level, which coincides also with the 100-day EMA, and then we'll take it from there. Gpchf. So I'm not gonna spend too much time on this one because I keep talking about the same thing, guys, with this one. And basically, the most important thing is that yesterday the 1.2203 territory, the one that I was talking about, held nicely, so it provided very good resistance. And yep, we saw a reversal, and today we're seeing a further move lower. And I'm gonna still stick to the same idea of seeing here a possible rising wedge. I mean, which of course, according to all the TA rules, tends to break to the downside. So let's see if that's going to work out or not. But in order to consider, or no, sorry, not consider, but in order to get comfortable with that idea, well, wait at least for a break of this, and wait at least for that daily candle to remain below this upside line here, which is the lower side of the this rising wedge, and then we could go for some further declines, yeah, maybe we'll see a deeper slide here at, well, what I'm going to aim then for will be at least for this 200-day EMA, and then I'll take it from there. But for now, I'm still leaning a little bit more towards the downside, but let's see if this finally can get broken. This lower side of this rising wedge can get broken. Quick update on Euro CHF here. So this one is at a very interesting spot as well. So drifting further south, and it's now near some of its key support levels. Now the first one being this 1.0750 zone, 51 territory, but the next one we have here is the low of the current lowest point of January, let's put it this way, near the 1.0739 level. And if that gets broken, now first of all, let's see if we can get a break of that level at least this week, because if we do, then we'll get ourselves a new low for January. On the other hand, also we will get ourselves a forthcoming lower low, which could increase the pair's chances of drifting further south. However, be very careful here near this level here, this December, the lowest point of December. But to be honest, it's really very close to this current lowest point of January. So in a way, all this area, watch out for it. If that gets broken, then yep, further declines could be possible. We could maybe start looking at the lowest point of November here, near the 1.0648 zone. And finally, EURUSD. So EURUSD also pushing lower. As you can see, yesterday everything worked out nicely. Look at this beautiful touch. I mean, oh my god, like 1.2059. That's what I was talking about, and basically that's the what I was saying. I kept saying this whole week, guys, that if we get a drop below the 1.2130, if we see the daily candle staying below it, then yep, further declines could be possible. But as you can see, yesterday it not only stayed below it, but it kind of the same day it hit this level, which is now kind of seen even more of a strong support level. And if that gets broken, then yes, of course, we'll start looking at some lower areas. But at the moment, I'm still remaining kind of cautiously bearish on this one, and I'm waiting for a nice good drop here below this 1.2059 zone. If that gets broken, then yep, my next target is the 100-day EMA here, shown as the green line, which is roughly around the 1.1970 level, or this 1.1924 mark here, which is the near the lows of the 30th and the 1st of December, the 30th of November and the 1st of December. So keep your eyes on that one. In terms of the upside, I would need to see, well, I would need to see a stronger push higher here. Ideally, previously I talked about this 1.2210 zone, but given how everything's kind of shaped up right now, I mean, I would probably wait well, actually, I would take it at least from this 1.2190 zone marked by the high of the 22nd of January, and then yep, we could take it from there. So keep your eyes on some of these levels, but for now I'm leaning a little bit more towards the downside. So guys, I'll have to wrap it up here. Thank you very much for watching and listening. Thank you very much for the views, guys, for the likes. I really appreciate that, and I really hope you enjoyed this session. If you want to catch my video later on, my trader's tea time is always 14:15 GMT. We'll have a quick overview of some of these instruments, some new ones, and then we'll take it from there. So yeah, have a wonderful trading day, guys. Stay safe, have your stop losses in place, and I'll see you later. Thank you very much, and bye-bye.